One thing I can tell you is that if you just look at US stock market history, right, there was a point in time in probably 1900, index constituent, healthcare as an index constituent was nothing, 0%.
How does India in the global parlance comes, like in terms of the entire pharma and healthcare space?
I think, like you rightly mentioned, we are already the pharmacy of the world. We are the largest suppliers in terms of value to the largest pharmaceutical market in the world, which is the US.
So at what GDP per capita threshold does India's healthcare spending shift from linear to non-linear?
As I told you, you will start seeing disproportionate spends on healthcare.
We have back with the Investing Wisdom series, and today with us we have Mr. Rajat Srivastava. He comes with 10 years of experience tracking in and out about the pharma and healthcare sectors. We'll try and see his thoughts, we'll pick up his ideas about what he thinks about the sectors. So I just wanted to understand your views on the pharma, like, and the overall health sectors. I think if you look at in maybe last 4, 5 months, 6 months, like due to the Iran, Israel, the war, the entire West Asia crisis, most people got into here due to maybe the defensives.
Yes.
So maybe if you can give some color on the sectors, and probably then we will take this forward.
So absolutely right. Like you rightly mentioned, right? Pharma and IT considered to be two defenses as far as Indian stock markets are concerned, right? But if you see last 1 year, because of the entire AI risk, Indian IT is already down 40-50% from their peak. So what investors are left with as a defensive, given the war situation, was obviously pharmaceuticals. That pharmaceuticals and the entire healthcare space, because it is largely insulated from external shocks, right? Because anyone who needs to go to the hospital, it doesn't matter whatever is happening globally, right? He will still go to the hospital. People will keep on having the medicines. People will keep on going to the diagnostic chains for their diagnosis. So it is very much insulated. So that's why people started positioning themselves in the pharmaceutical and healthcare space. That is why you have also seen some flows coming into this sector, and that is why the sector has been quite steady. Like even if you see the last 1 year return of BSE healthcare, it's closer to 6-7%, while probably the Nifty is down from its peak, right? So that's how I think about it. But interestingly, if you see, most of the large caps in pharma, they have not given any outside returns. It is largely the mid and small cap healthcare names which have done quite well in the last 6-7 months.
So before we get into maybe a market cap or maybe within the subsectors, why don't you give us maybe the maybe long-term structural tailwinds? Why do you think in every investor's portfolio one must have pharma healthcare as an allocations? So can you just take us through the structural story, what pharma and healthcare sector can offer?
Sure. So at Tata Mutual Fund, we totally believe that healthcare is a multi-decadal structural growth story, right? If you see India's healthcare spending as a percentage of their GDP, it's only 3.8%. You compare it to any other economy which is developed or emerging, like a South Africa, right, or a Brazil, right? You will see that their healthcare spend is 9% of their GDP, 8 to 9% of their GDP. US, totally different orbit. The healthcare spend is roughly 17-18% of their GDP. I'm not even comparing ourselves to US, totally different economy. But even if we were to reach, let's say, Brazil's GDP per capita, which is $12,000, right, from $3,000 today, that essentially means that, and we spend 9%, 8 to 9%. That essentially tells you that healthcare has to grow at 18%, right? Even if we don't spend 8-9% on healthcare, we spend just 5% of our GDP, right, on healthcare. Then also we'll be growing at 12.5% as far as healthcare is concerned. So, and Nifty 50 or the GDP of India expected to grow at 10.5-11%. That tells you that 200 basis points of outperformance on a 10, 15, 20 year basis, CAGR basis, is what you can expect from healthcare if I just have to draw comparisons here. So that's how we think that it is a structural growth story. That is one. Secondly, if you see the population of India, if you see the segments, right, large part of our population is still young, right? But 20 years down the line, that population is obviously going to grow old.
Correct.
Today, 25% of the population is above the age of 44. Next 40 to 50 years, 50% of the population will be above the age of 44. So today, probably we are underinvested in healthcare facilities. We are still okay because large part of the population is still young. But imagine a situation 40 years down the line, 25 years down the line, right? When large part of the population is old. And we don't have enough hospital beds, we don't have doctors, we don't have nurses, right? We don't have enough diagnostic chains. Who will bear that burden, right? No one, right? So capex has to be done. Number of hospital beds will come in. Diagnostics will become bigger and bigger in the next 20 years, because if I don't need a diagnostic test today, I'll be needing it tomorrow, right? And even more when I turn 40 years old, 50 years old, 60 years old. So that's how I think it's a structural growth story, and it is going nowhere. You will always see healthcare, even if you dissect healthcare, right? You will see, as if you see BSc healthcare, which is our index, right? You will see that it has outperformed overall Nifty. And my sense is that even in the next 10, 15, 20 years, it will continue to outperform. Yes, there will be patches here and there, but over a 10, 15, 20 year period, you will see BSc healthcare or healthcare as a segment outperforming your broader indices by a margin.
I agree on that side. So I was also reading one of the data which says that every year we add almost like 1 crore people who goes into the senior citizen sort of, and that trend will continue for next 15-20 years basically.
Absolutely.
Today we have maybe the 16-17% of the populations who are in the age group of 60 plus.
Correct.
Which is as good as like a Pakistan.
Correct.
Like that the amount of there. Many people, I think, don't do a preventive healthcare. Only when your earning goes up, only those strata of the people do the preventive healthcare.
Yes.
Most of the people are reactive. Only when the disease comes, they take medicines.
Yeah. So as I said, GDP per capita, where we stand today, $3,000.
Correct.
Most of your basic needs are taken care of here.
Correct.
Post this number, when your GDP per capita grows to $4,000, $5,000, right, $7,000, your healthcare spends increase disproportionately, because now you want to take care of yourself.
Correct.
You are wanting to live a more healthy life. You wanting to live longer, right? So you start doing diagnostic tests, right? What happens also is that obviously आपका एज भी बढ़ रहा होता है साइड बाय साइड, सो उस वजह से your salary levels are probably better versus what it was 5-10 years back. So your capacity to spend is also higher now, right? So, and age भी बढ़ रहा है, तो मेरे को knee replacement surgery भी हो सकता है चाहिए हो, कभी हो सकता है heart issues हो रहे हो. So ये तो structural है. So every week, even today, if I'm 35 years old, 20 years down the line, I'll be 55, right? Correct. Majority of the population in India is today probably my age. Correct. Which will become old in the next 20 years. And they will need all these healthcare services. That's why I said there will be a disproportionate spend on healthcare, and more number of people will also be needing healthcare. And that's why spends on healthcare will probably see a higher CAGR versus what you will see in probably other buckets. We have seen that in other markets, in US, in other emerging markets, we have seen that already. India will not be any different.
कोई ऐसे ट्रेंड्स आप बता सकते हैं जो शायद आपने डेवलप मार्केट में देखे, जो शायद हमारे अभी तक नहीं देखे, बट यू कैन फोरसी दैट इज गोइंग टू हैपन इन इंडिया आल्सो? कुछ एग्जांपल्स ऐसे हैं आपके पास में?
Yes. So one thing I can tell you is that if you just look at US stock market history, right? There was a point in time in probably 1900s when healthcare index constituent, healthcare as an index constituent was nothing, 0% weight, right? Today it is already at 13% weight, which is telling you that healthcare, as the economy has grown older and like bigger, healthcare has gone up meaningfully, right? The biggest delta across all the sectors has come in healthcare, right? India today is less than 5% in the Nifty and probably roughly 6% in Nifty 200. My sense is that this will also grow to, let's say, 10, 12, 13%, has the potential to grow there, because the companies will keep on getting bigger and bigger. And it's not just US, it's KOSPI, which is a South Korean index, right? You see FTSE, you see any other index.
All major indices?
Every index will have 9 to 13, 14% weightage in healthcare. India is the only one, and this is despite the fact that we have such a large population, right? So it tells you that it's a given that healthcare spend will increase, companies will get bigger, and probably weightage in index will also get much bigger.
Just matter of time.
Yes.
So let's come back to the maybe company. So how does India in the global parlance comes, like in terms of the entire pharma and healthcare space?
Yeah.
Today, obviously, India is called as in pharmacy of the world.
Yes.
But can you compare or can you give some examples of how competitive Indian companies versus maybe a global peers?
Very competitive. I think, like you rightly mentioned, we are already the pharmacy of the world. We are the largest suppliers in terms of value to the largest pharmaceutical market in the world, which is the US. Right? All our large cap pharma companies, Lupin, Sun Pharma, Cipla, Dr. Reddy's, you name it, they are already present there. Not just the large cap pharma, even the small and mid cap pharma. You name a company and they have a business in the US. So yes, they are very competitive businesses, and that is a problem also which I see, right? Because it's so easy to do a business in US. Like if you have a US FDA compliant facility, and if your R&D engine is decently strong, anyone can start supplying products to the US. That is why the competitive intensity is very high in that market. Versus, let's suppose a company which is focused only on India or a branded market, right? There the gestation is very long to build a brand. You will not even think about giving them any other medicine, and these are medicines, brands which have been built over the last so many years.
Correct.
Right? That's the beauty of this business, that once you have built a brand, you have very sticky revenue stream. Right? It's not an instant gratification business like what probably the US is, right? Where you can today set up a facility, get a product approved, and supply it tomorrow. Right? The only mode there is pricing. If you are at a lower cost, you can supply. Right? But if someone else comes tomorrow and undercuts you, he will get that. Right? It doesn't happen in the India business, and that is the beauty. They have now created a cash engine. Right? It just keeps on throwing cash. They have to do nothing, no capex, nothing. Just hire people, go out, promote the brand, and keep getting cash. Right? So that is the kind of businesses which we like.
How do you compare Indian companies spending on the research and development vis-a-vis the maybe foreign counterparts? Where do we stand today?
We are
R&D spend.
We are nowhere near.
Okay.
Right? Nowhere near, because largely because of the fact that we do mostly generic products. Right? Generic products don't need that kind of high R&D spends. Okay. Innovators are trying to innovate new products, right? Where R&D spends could run into billions of dollars for a single product.
So at what GDP per capita threshold does India's healthcare spending shift from linear to non-linear growth?
From here on. From $3,000, as I told you, you will start seeing disproportionate spends on healthcare. Because all your basic needs are already met. Roti, kapda, makan, everything is taken care of now, and now you want to spend on luxury, or you want to spend on yourself and try to live a longer life, right?
Correct.
So that's there.
So which sub-segment between hospital, diagnostic, or formulations will capture the largest share if India's healthcare spends reaches maybe 10% like the other continents are there?
Yes. As of today, hospitals is a larger pie.
Okay.
I have good reason to believe that it will continue like that.
Okay.
Right. So today, hospitals healthcare delivery
Mm.
would be, let's say, 7.5 lakh crore market,
Mm.
if I'm not mistaken, and pharmaceuticals would be closer to 2.5, 2.6
Mm.
lakh crore market. So largely it's hospitals, and diagnostics is not very big, right? 70, 80,000 crores
Mm.
as of today, including everything,
Mm.
organized, unorganized.
Mm.
I think hospitals, so Indian pharma market is growing at 8 to 9%,
Mm.
10% at best.
Mm.
But the hospital space is already growing at 15 to 20%.
Mm.
And these are the larger ones I'm talking about,
Correct.
right? They are growing at 15-20%.
Mm.
So I have good reason to believe that going forward, they will only capture the larger value.
Mm. So coming to that, I think when we look at that per 10,000, the number of beds, I think we are still deficient.
Yeah.
And we have to still add the whatever the existing number of beds are there, we have to add another the similar
Yeah.
number of beds. So who will fill this gap? Do you think the people who are already in the listed organized listed space, or you will think that the unorganized people who will fill this gap? Who are the strong contender to fill this gap?
I believe that the larger private chains, right?
Mm.
The government will not do it.
Mm.
When we speak to the hospital chains,
Mm.
right, the larger ones where we are already investors,
Mm.
they, because of the might of their balance sheet, right,
Mm.
and the kind of cash flows
Mm.
these businesses are throwing right now,
Mm.
they have the ability
Mm.
and also the will to do
Okay.
it,
Okay.
right? Because their growth is now dependent on the incremental bed addition which they will do,
Correct.
right?
Correct.
So we were talking to some of the hospital chains, right?
Mm.
They were telling us that today most of them are in the vicinity of 7 to 10,000 beds.
Mhm.
Right? Even if they go to 35, 40,000 beds, that's
Mm.
still not be enough
Mm.
for India as a country over the
Mm.
next 10 years,
Mm.
right? And
Mm.
I'll tell you why.
Mm.
Why I say so.
Mm.
See, today probably we are not feeling the pinch of shortage of hospitals. Like you said, we have
Mm.
1 per thousand, right?
Correct.
Which is much below WHO threshold.
Correct.
We are okay, we are not feeling the pinch, probably because large part of population is still young,
Mm.
right? I said,
Mm.
right? Imagine a situation 20 years down the line when we don't, most of the population is old
Mm.
and we don't have hospital beds.
Mm.
So we have to start investing today
Mm.
so that we can take care of the population then, simply because of the fact, see, every hospital, if you have to open a 200, 300 bedded hospital,
Mm.
you have to spend 300, 400 crores.
Mm.
Who's going to put in that kind of a money,
Mm.
right? Only these chains can do that,
Correct.
because their incremental cash flows are so strong,
Mm.
and right, and for them to grow, they have
Mm.
they have no choice but to do it,
Mm.
and they also have the will, right? You can
Mm.
already see that they are already doubling down on their capacity,
Mm.
and I don't see them stopping.
Mm. What I also like about in your presentation that your pendulum theory.
Yeah.
I would really want you to explain to our audience, like what that
Yeah.
pendulum theory is all about.
Yes, absolutely. So I follow, as an investor, I follow a pendulum based investing. I very closely follow it. I think that has helped me make a better investor, and I think everyone should follow that. At least keep it in their minds when they are investing,
Mm.
right? What? So imagine a pendulum, right? There is a middle,
Mm.
right?
Mm.
I say that that is the equilibrium price
Mm.
or the fair value of any stock.
Mm.
Now the pendulum can go on the right, which means that the stock is the stock price is rising, right? So there can be multiple reasons.
Mm.
So let's suppose the pendulum has shifted slightly towards the right.
Mm.
There could be reasons like the next quarter earnings are going to be good, or there is some positive news flow which is coming in the stock, right? The stock will move up,
Mm.
but that's not the fair value. It has already drifted away from the fair value,
Mm.
right? That's where the people start making noise about a stock,
Mm.
right? And people start feeling the fear of missing out.
Mm.
So some people start buying
Mm.
into it at an already higher price versus the fair value.
Mm.
When some people buy, the stock goes up further.
Mm.
Then more investors feel like the fear of missing out, right? Then they more investors jump in.
Mm.
The stock goes up even further, to the extent it goes up so high
Mm.
on the right side
Mm.
that you will feel you. So what are the characteristics of the market
Mm.
when the stock is gone up so high,
Mm.
right? The multiples are at peak,
Okay.
right? You will see multiples going to 75, 80, 100, trailing multiples, you will see that most of the promoters are exiting the business, private equity is exiting the business, right? You will start feeling that nothing can go wrong in this market, everything is good, right? Those are the characteristics of that market, right? A good investor, a growth investor, a good growth investor, I would say, should ideally exit there. But as you know, we investors are probably
extreme optimism is a good sign one can redeem from that place.
Absolutely. I think that's where you should realize that, okay, fine, the stock has done very well. Now I should book some profits or I should exit it, right? At the extreme optimism. That's where a private equity selling or a promoter selling is a very good indicator for me, which tells you that, okay, the peak has happened in this sector or in this stock, right? A good growth investor will probably sell there. But you know, people are greedy, right? People think it will go further up. That's where something goes wrong. Either the earnings fall short of your expectations, or there is some negative news, the stock starts falling, right? When the stock starts falling, people who were investors here, they feel that, oh, I have to book. My stock is already falling. I have to book my loss, or it will fall further, right? That's where some people start selling. The stock comes down. When the stock is down already 10-15%, most people feel that I have already made profits. Let me sell it, right? The stock starts drifting towards its fair value, right? That's where the problem is it doesn't end there. That's where people start feeling scared, right? They sell it more. The stock starts moving towards the left, right? Again, more now the most desperate seller will come, who has booked, who was investor there, and he's now here. He will feel that, boss, I've made massive losses here. I have to get out of this stock, right? The last desperate seller will come here. He'll push the stock further to the extreme left. Now, what is the characteristic of this stock, right? Here, the stock is below the fair value. The promoter is buying, right? The promoter becomes a buyer now. This is where the value investors will come in, right? So the value investors who were looking like probably like fools at this time when the pendulum was going towards the extreme right, they all of a sudden start looking the greatest investors of all time, right? So, but the truth is, the maximum amount of money you will make when you go from the extreme left to the extreme right, right? So you have to find stocks either here or here on the left side, or at best at equilibrium, or even better, if you are a very good growth investor, maybe somewhere to slightly to the right of the equilibrium price. But if you are an investor to the extreme right, yes, no one knows where the extreme right is. That is the problem, right? But if you are an investor here, most often than not, you will mostly lose money. So I, as an investor, I am more tilted towards the left. I like to build a portfolio which is more tilted towards the extreme pessimism than probably some bit of pessimism, or at best at fair value.
So, give me some idea about your framework. Na? Ki, what is your filtration criteria? What are your non-negotiable terms? Which are the companies doesn't get into your portfolio? Which are the companies are you have a good filtration criteria? So, if you can take us through that.
Absolutely. So, I think one thing which I do, I would like to believe I do well, is that how I look at companies in terms of financial statements, right? Like for most investors, probably will see first the P&L, then they will see the balance sheet, and then they will see the cash flow. I follow the entirely opposite approach. I first see the cash flow, then I look at the balance sheet strength, and last I see the P&L. Okay, there is no sense in high growth company if that growth is not translating into cash, right? So cash is of paramount importance to me. Any company which is generating good cash flows, has a very good EBITDA to cash flow conversion, comes in my investable universe, right? That is paramount, and that is non-negotiable. A company might be doing let's suppose 100 crores of EBITDA, but on cash flow it is doing only 20 crores of EBITDA. I don't like such companies, because that tells you that in order to grow, they have to continuously keep investing money in their working capital, or their receivable cycle is very high, working capital cycle is stretched, or something or the other reason, some or the other reason why it's not translating into cash. So those are the companies where the EBITDA to cash flow conversion is very low. You will not see it in our portfolio. Like any of our holdings, you will not see such stocks. So if you go through our portfolio, we have some 35 stocks today. All of them will have very good cash flows. So as I said, that is paramount importance. What we don't like is companies which have had issues with corporate governance in the past, right? We don't like companies where the promoters have been selling their stock. We don't want to give exits at a sweet price to private equities or promoters. Yeah, that's second. And absolutely, what then, as I said, balance sheet, right? If a company doesn't need to invest in order to grow, that's a fantastic business for me. I don't like a company which has to continuously keep on investing for growth, because when the investment cycle stops, then you can't grow, right? Then why should I give you a multiple? You can be showing me EBITDA growth, you can be showing me top line growth, but if the free cash flow, the entire concept of valuation is DCF, right? Cash flow discounting, right? But if there is no FCF, then how can I value a stock, right? I cannot just assume that one day this company will generate some cash. If the company has not generated cash in the last 15 years, I generally tend to avoid such a company. So free cash flow has to be there, right? As I said, I like companies where you don't want to invest in order to get growth, which is largely branded pharma companies, right? Even hospitals need to invest in order to grow, but I like hospitals. But I don't like places where, because of incremental capex only, you can grow, and otherwise you can't generate any free cash flow. Because even if I have to buy such a company, then I don't want to give it a very high multiple. I think it should be a low multiple sort of a business, in my view.
Currently, the AI is the talk of the town. Any positives or maybe negatives come from the AI?
Yes. In our discussions with some of the healthcare companies, all of them are incorporating AI in some form or the other, right? For hospitals, it is probably at billing, right? Or any other operational matters. For pharmaceutical companies, it's in their drug development programs. They are already using AI, right? Yes, and it is being used increasingly. That's there. Yes.
Okay. So, any within the subsectors, which are the subsectors are you seeing the headwinds and the prices have fallen, but it at the sweet spot? Maybe if someone looks for a 3 to 5 year perspective, or which are the subsectors are there where good amount of tailwind is there, but the valuations are still reasonable?
Unfortunately, in healthcare, valuations are, in my view, peakish in almost every segment. There are always bottom-up opportunities there in the market, right? If you see our portfolio, there are quite a few names there. But overall, I think valuations are expensive. But if you ask me, where are the tailwinds? The tailwinds are obviously in the API and the CDMO space. There are massive tailwinds because of this entire China plus one narrative, right? Every boardroom talk in US or in Europe is all about, how do we diversify away from China, right? So there, India has a good, and that is why you also, but the valuations are already factoring in that, right? That is why you will see all these CDMO companies at 75 times price to earnings, 100 times price to earnings on trailing basis. Right? The valuations are already capturing in that growth opportunity.
So what would you advise to the investors? Maybe a staggered investment via SIP makes sense in this particular theme sector for
Yeah.
a next 3 year, 5 year perspective, or do you still think someone can come with some amount of lump sum and then do a staggered investment? What would be your advice?
See, because I feel that healthcare as a space is heated,
Hmm.
and also because of the fact that large part of healthcare
Hmm.
index
Hmm.
is dominated by top 5 top 6 pharmaceutical companies,
Mhm.
right? So any drawdowns there would
Hmm.
probably have ripple effects on the smaller mid cap companies also,
Hmm.
right? So I would suggest, obviously they will bounce back quickly
Hmm.
because ultimately, like I said, markets do reward cash flows, right? But you can expect that because the market is so heated in the healthcare space, you can expect that there could be some bit of drawdown which can impact the entire space.
Hmm.
So as a more staggered approach
Hmm.
would be better in my view as of today.
Hmm. Okay. So I'll take this opportunity to maybe touch upon the overall as a market view, because what's your, maybe as an investment team, as a Tata mutual fund, what the investment team is thinking about, what's the outlook for the overall market, maybe for
Yes,
a medium term perspective, 3 to 5 years perspective.
sure. So see, when we started the year, we
Hmm.
had two main risks,
Hmm.
right?
Hmm.
One was the US Iran Israel war.
Hmm.
Second was the entire AI
Hmm.
disruption, right?
Hmm.
I think the AI thing is here to stay,
Hmm.
but at least the one risk of the war is now behind us,
Hmm.
right? Very recently.
Hmm.
So, to that extent, I think, but now there is another problem, right?
Hmm.
The monsoons are looking bad.
Hmm.
There's a 40-50% deficit, right? That's what the MF is projecting. So, if that is to be true,
Hmm.
right, then our entire rural economy takes a hit,
Hmm.
because of which other sectors like automobiles also take a hit, right?
Hmm.
So if the monsoons are bad, you can't expect the economy to grow at a 16-17%, probably what the market is right now estimating.
Hmm.
I think the view is that if the market will probably grow at 13-14%,
Hmm.
and yes, in that context I think you can expect that Nifty could touch 27,000 sort of levels, which is a 10-12% upside from here.
Hmm.
That's how we are thinking about it. But the next year probably, since the base will be okay, I think next year onwards we should see a normalized
So,
growth.
if you look at on a consolidated level, which are the sectors do you think still offers the good valuations entry,
Yes.
apart from the pharma and healthcare?
So pharma is
With your
obvious.
interactions with the
Yes.
fund manager, investment team at the Tata Mutual Funds.
So I think banking is something we are absolutely positive on, and followed by power,
Okay.
and then IT.
Okay.
Yes. So that's that's these are the four themes which we are quite positive on. So healthcare being the fourth.
Yeah. Okay. So let me come back to your personal journey. You almost have now 10 years of 1 decade of experience in the sort of the capital market, largely on the research sides.
Yes.
So how your philosophy when you started your career, now where you are currently, have you seen the sea change between the way you used to think when you started your career in maybe 2015-16 relative to 2025, 2026?
Yes. Absolutely. Good question, sir. So, absolutely, a sea change. So, evolved as an investor overall, right? Right now, earlier, probably back in 2015-16, when I was a fresh MBA pass out, I would just buy a stock listening to people, right? The stock will go up 5x, 10x. And now I have to do more bottoms up research, because now I am also answerable to a large investor community. And yes, because largely because of the fact, as I said, I've learned from some of the finest investors how they think about investing, right? So I think that has helped me in a big way.
Any maybe any personal finance habit you are still struggling with?
Uh, not really.
Okay.
Sorry, what do you mean by that?
Personal finance in the sense the way we invest, the most of the people invest is like more like in personal finance. Is there any one area you think that wish still I'm still working on that, but still is not coming?
Yes.
Sort of.
So I basically love equities. Okay, so I have not been able to make use of the entire silver commodity space surge which we saw last year, right?
As an asset allocation,
As an asset allocator, probably I have to get better. Maybe because all my personal wealth is in equities right now. So and yeah, that's where I think I can probably do a better job.
Any in last 10 years, any one, in hindsight, probably you can call it as a mistakes. Can you, what sort of mistakes you did, and probably that is the biggest learning lesson for you? Can you share one of that?
In the last 1 year?
Maybe last 10 years, during your the entire decades.
Yes. In terms of
in hindsight, it may look like a mistake, but
yes,
maybe if you can share those, somebody can learn from your mistakes. And
absolutely. I'll so
what
since
direct investor should not do, which maybe as an amateur you did, but
yes,
because now you have an experience, you are into building your the entire career into the in the institutional framework basically, and which may be a good learning for you, but maybe in the back days, maybe 10 years back,
yes,
that was not the framework you were having, and maybe
yes,
because of that you may have made some mistakes.
yes. I would say to your investors, and personally, I also follow that. Don't overcomplicate investing. Keep it very simple, right? People tend to make mistakes when they try to follow the herd mentality, right? This everyone is doing this, so I should also get in there. But if you just stick to basics of investing, right? If you keep, as I said, if you are on the left side of the pendulum, you are probably going to be good, because India is a growing economy. Majorly stocks will go up if you are on the left side of the pendulum.
Correct.
Right? So I would say don't follow herd mentality. Invest in stocks which you already know. Don't try to overcomplicate investing by investing into things you don't understand, right? Because probably someone else understands that better, and he will exit it much before you do, and you are probably stuck, right? So I have made mistakes that sort of myself, and now I am
one should not clone their portfolio to somebody, the famous investors.
Absolutely. Like people tend to, some of the famous investors buy a stock, right? People try to jump into it. The stock zooms 40-50% just because of that. I would say don't complicate all that. See, your target should be 15-16%, right? As long as you are working with that, you will beat any index. You will beat fund managers, most of the fund managers, if you can just target of let's say 16-18% CAGR. It's only when you try to go after returns which are much higher than that, that's where most of the people start making mistakes.
Maybe one last questions, any good advice from maybe your seniors, mentors, or parents you still carry?
I have a very good mentorship from my previous organization as well as my current organization. But one of the best advice I have ever received is that always go after group profit maximization. Never think about your personal interest over others. It's only when your people around you grow, that's where you also grow. But if you think that only you should grow, others should not grow, that's not how it works. I think that's a phenomenal advice which I've received from one of my mentors, and I will always take it with me.
Thank you, Rajat. Really appreciate your time. Thank you for speaking your heart. Really appreciate it.
Thank you.
Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.